Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the late evening of Tuesday, January 5th, 2016. Starting off, let's take a look at the daily candlestick chart of gold. Last couple days, gold has started off the year with strength, rallying back to resistance at 1080. This action still looks bullish to me in the very short term. Gold kind of had a little bit of a double bottom. Then we see last day of trading last year, a small bullish hammer. So it's rallied up to resistance again. Still think this is more likely than not going to break above resistance here. And in that, if that happens, we continue to look at an upside target of 1120 or around there. The 50% retracement from the October high down to the December low is approximately 1118. So that's something we're focusing on. Also note the 200-day moving average resistance. That's at 1141. That's continuing to decline. It should come down maybe at 1130 around early February. And note that I forgot if I already said that, but that was resistance last May and last October. So if we see gold break above the resistance here and rally close to 1120, that's when you want to get defensive in the short term. That's where we could see the start of the next leg down potentially. Now, something interesting we haven't talked about lately is how gold is performing against foreign currencies and these other markets, and that has picked up in the last couple days or the start to this year. So this chart here, we have gold against the foreign currency basket on the top, and just gold and U.S. dollars on the bottom. Gold against foreign currencies, it tested trendline support 3 times in the last 5 weeks, and the last 2 days it's had a nice increase. So even though several months ago it did fall below the 400-day moving average, and that was a concern that I noted at the time. But even though that happened, it tested this trendline support and spent a fair amount of time testing that, and now it's rallied. So we'll have to keep our eyes on this and see if gold against foreign currencies can get back above that 400-day moving average. Is this going to have a pop higher? I mean, is this rebound going to be sustained? It closed at 50.66. Is this something that could rally up to 54, or is this just going to peter out around 52 and then come back down? I don't know the answer, but it's something to definitely keep an eye on. And in the same vein, let's keep an eye on how gold is performing against equities, because I've always maintained that a major signal that will tell us when this bear market is going to end is when we see gold start to break out against equities, in global equities. And so here we have gold against the NYSE, gold against global stocks in the middle, and then gold against emerging markets. And again, I mean, just look how beautiful the 400-day moving average is. It defines the trend. I mean, we see, looking at gold, let me start with gold against emerging markets. Note how it tested it tested the 400-day moving average 3 times before finally breaking through that, and then we saw a positive retest of that support in the fourth quarter last year. So gold against emerging markets, that is in an uptrend. I mean, you can call it a fledgling uptrend. We haven't gotten to that stage yet with respect to global stocks and the NYSE, but look at those black arrows. I mean, perhaps the term double bottom gets really overused a lot. But just for the sake of simplifying this, I mean, potentially that could be a double bottom, or if it's not a double bottom, we could at least say that gold relative to stocks is in a bottoming process. I mean, if you look at it, it's tested the 400-day moving average. In both those charts, it tested it twice. And note that it was for gold against emerging markets. It was after the third test after the third test. After that test, gold then immediately broke through that resistance. So we'll see what happens. It's going to be very interesting in the weeks ahead to see if gold relative to U.S. equities and global equities, if it can show more strength here and break above the resistance. So I don't know if we're going to see a huge breakout in the next couple weeks or so, but maybe we'll see more strength here, and maybe that will precede a breakout that possibly comes in a couple months or in the spring. I'm not really sure, but I do think by the end of 2016 we're going to see the shift here. We're going to see gold finally outperform stocks. So again, to repeat myself, definitely something we want to keep an eye on here, because improving relative strength with respect to the first two charts, that is going to be a precursor for gold's bear market ending and then beginning a new bull market. And the biggest problem for gold starting this year off is I think it's going to be the US dollar, even though, I mean, the last couple days we've seen dollar strength, gold strength. But just looking at this chart, I mean, this daily bar chart of the US dollar, this is a really bullish chart. I mean, this is a bullish consolidation. I mean, some people are calling this a double top. It's just nonsense. I mean, this is nothing other than a really bullish consolidation. I mean, this is set up for a major breakout. I don't know if it happens in the next couple weeks. I mean, it might take a couple months. Like I said, I don't know, but I can't say enough how this is a bullish chart. And in the middle of the chart, we have the net speculative position in the US dollar. And then at the very bottom, we have the net speculative position divided by open interest. I mean, I like to use that because it gives you a better consistent look going back 10, 20 years. But the US dollar, the open interest in this contract, or market I should say, is just, it's not very large, so that can fluctuate quite a bit, as you see just in the last couple months. I mean, the open interest for gold and silver is much larger. For gold, I should say, is way larger. Now, so let's focus on the middle. I mean, we can see last March of 2015 that the net speculative position was 100,000 contracts, and the last reading was only 41,000 contracts. And back then gold was at 100. Now, as of when that data came, gold was probably at 97-ish. So a lot of speculation has come out of this market, and it's really primed, in my opinion, for a big breakout at some point. I mean, if it's not going to happen in the next couple weeks, it probably happens in a couple months. And if you remember a previous editorial and video I did, a lot of people had charts and things out there that said, when the Fed starts cutting rates, the dollar usually sells off or declines. But I showed you that if you look at the Fed funds rate, and it was increasing in 1983 and 1999, and those are the two most similar periods today, because those increases were preceded by strength in the US dollar. So I don't see, as I just showed you here with the COT, I mean, sentiment is not super bullish on the dollar right now. So I'd really beware of that so-called contrary opinion on the dollar. I mean, it just, I know I'm just talking over and over about the dollar, but I think this is going to go a lot higher this year in the first half. And so what does that mean for gold? I mean, we've showed you the monthly chart, because obviously the monthly chart is one of the most significant out there. I mean, it's more significant than weekly and daily charts, and that chart has showed very strong targets at 890 and 970. Now, the quarterly chart is more significant than the monthly. Just look at how well the quarterly chart defines the key prices of the last 7 or 8 years. I mean, we can see that 1550, 1180 to 1200, and you can see about 930 to 1000. I mean, those are the real strong targets. And so we've obviously been talking about 970 to 1000 as the next major support, and a possible spike low down to 890. But the quarterly chart, what that tells us is don't discount 930. That's a very strong support level also. So that's something to take into account. I mean, maybe 970 is going to be the bottom, but maybe we see a spike, an intraday spike down to 930 or 940. So it's just something to keep in mind when you're looking at all these charts. Don't be afraid to look at monthly and quarterly charts. Now, getting back to the short term here with the gold stocks, this is GDXJ. It's been bouncing around for the last month. Closed today at 1984. It's got resistance at 20. There's a bit of a bullish ascending triangle pattern here. There are some gaps, so don't be surprised if it sells off for a day or two. But in the short term, this looks bullish to me. In the potential breakout target would be 2150. You can see the 200-day moving average that was resistance in October. That's at 2175. And then the next resistance after that is 2250, which I showed there on the chart. And below we have the GDXJ against gold ratio. If that can come up close to 2 or 0.02, I should say, multiply that by the 1120 target we talked about. I mean, that's about what is that, 22.4 or 22.2. So that comes very close to the 2250 resistance we just mentioned. So that is our short-term expectation here for GDXJ. Maybe the rally stops there. Maybe it continues up to the 400-day moving average. We don't know. One thing that I'm personally doing, I mean, I'm stock specific in my service, but focus on the leaders. Focus on the best companies out there that can that are showing the most relative strength, that have the strongest fundamentals, and can really withstand several months or more of a gold price around 1,000. And some of the leaders right now, or most I should say, are companies with deposits in Canada and the ones that are operating mines in Canada, and the same goes for Australia, because as I've said and written about, those companies, if they're in Canada, their costs are in Canadian dollars. If they're in Australia, their costs are in Australian dollars, and those currencies have fallen more than the gold price. And also, let's take into account, I mean, the crash in energy prices. Fuel for an open pit mine is up to 30% of the cost for that mine. And so just a 30% decrease in fuel, which we've definitely seen, that equates to roughly a 10% decrease in costs. So companies that are operating big open pit projects, they're getting, their costs have come down a lot in the last 18 months. And companies operating in Canada and Australia, they're doing fine right now. Right now they're doing better than they were 2 years ago because, as I said, the decline in the currencies in those places has been faster than the decline in gold. So keep that in mind. Not every gold company is different. And right now we're working on a 2016 update for our book. We're giving it away for free. You can get it at thedailygold.com/book. If you're already on our list, don't worry. We will send you the book when it's updated. That's all for today. Thank you so much for listening and watching. You can follow more of my work at thedailygold.com. If you have any comments or questions, feel free to send me an email. Thank you all for listening and watching. I wish you all the best in 2016, and I look forward to speaking with you again in the next week or so.